Hello, good morning, ladies and gentlemen. I welcome you to yet another promising session as we take a technical dissection of the current market structure as we start rounding off on the trading activities for this week. So happy Friday to everyone in the house, and one thing we normally do on Friday is to round off the pairs that we have been monitoring, put some rounding off activities in place, secure our positions, and then anticipate the possibilities of probably being part of the profit taking activities, which is peculiar with Fridays. And one thing I normally tell my clients is that on Fridays like this, what we look out for in the financial market is there is a tendency for price action to move in the opposite direction. And why is this so? Well, for those who have been taking profit, probably price action has moved in a particular momentum since the beginning of the week. Definitely on Friday, those who had actually bought or sold at one point in time will want to be taking some profit into the weekend, and this will always be reflected on the chart in the form of price action moving in the opposite direction of where price had been going since the beginning of the week. So we are going to be looking out for these possibilities in the market too as well. And for those who are joining for the first time, I welcome you on board. Thank goodness to have you around. And one thing I normally say is that you want to be watching my previous videos, which I normally share during the course of the weekend, to have a background knowledge of what we are going to be talking about here, as the live session we do here on every morning is always focused on the 1 hour time frame, as this is where we want to be taking our positions from. So I have the link in the description box below for in case you want to take a look at these videos as well. So with that being said, what we are going to be doing first of all this morning is to look at the fundamental. We want to keep tabs with the fundamental perspective in the market so that we can position ourselves ahead of this event to take advantage of trading opportunities. Now, zooming into the economic calendar here. So for today, since we have what we are going to be focusing on is the pound sterling and the US dollar, as we have three macroeconomic events affecting this instrument that we have been monitoring since the beginning of this week. And the first one is the S&P Global publication, that is the global preliminary manufacturing and services PMI survey for the month of March. And this is going to be coming up in, I think, 20 minutes from now. And according to what the FX Street is saying here, is an indicator of the economic situation in the UK services sector. It captures an overview of the condition of sales and employment. So we are going to be looking forward to this event. It's a very high impact event. And from the data we are seeing here, the previous data came in at 53.5, and we have a consensus projection of 53. So we want to see what that will be coming in to, as in terms of the actual figure, to know the deviation, if it's going to be positive or negative. And we are also going to be looking at the chart, the GBPUSD chart, to see how we can position ourselves in anticipation of this event. Then also in 3 to 4 hours from now, we have the durable goods order, that is for the US dollar, and it's a little bit positive here. As you can see, the previous data came in at minus 4.5%, as against the consensus of 0.6. So expectations are high on the durable goods order. So we are going to be looking forward to that and see how the market will be anticipating and reacting after the event. Then the final one, we have the non-defense capital good order, excluding aircraft, for the month of February as well. And there's a little dip here, as we have a previous data of 0.8% against the consensus are expecting a 0%. That's a little dip to the downside. So we are going to be looking forward to see how the market will also be reacting or anticipating this event using our technical skills to identify market structures on the chart. So with that being said here, let's dive into the chart right now to look at the current market structure in anticipation of the UK and the New York session, and as well the macroeconomic event we are looking forward to today. Well, across the pairs, the US dollar has been on the negative side, but we are going to be looking at that in a moment, so don't let me jump into that right now. So let's go into the first commodity for today, which is the US oil. Well, on the US oil, we have been profitable on this commodity since the beginning of this week, and let's quickly run through how the week has started for us on the US oil. So at the beginning of the week, we saw the situation here where we started seeing buy pressure resume just right around that $65 level, which was around this area. And remember, we actually had a sell position at that particular point in time. Price action moved about 60 pips in our favor before we started seeing that bullish momentum, which actually took us out of that position at a loss. So we started the US oil at a loss this week, but thank goodness we were able to recover whatever we lost as we anticipated a breakout or breakdown of that channel. And since price action was trading just between the $67.50 level and the $65 area, we were anticipating either a breakout of that channel or a breakdown of the channel for trading opportunity. But what happened here was quite interesting for us on Tuesday. So we didn't have a breakout until the second day. That was like after 36 hours after the market opened. We saw the breakout retest of the structure, which actually triggered our first buy position for the week. And we continue to ride that bullish momentum since the breakout of that resistant line at the $67.50 level by adding more positions at breakout of key structures like the $68.50 level, which you can see here, which we added one more position here. That was later on Tuesday. That is the New York session on Tuesday. Then on Wednesday, we also added another position after citing this channel between the $69.40 area and the $69 area. And one peculiar thing about this structure on Wednesday was the fact that it shares a confluence with that bullish trend line, which is supposed to be our yardstick for trading activity for the week. And we anticipated either a breakout or breakdown of that channel. Obviously, if a breakdown happens, it's going to break down that bullish trend line to give us a bearish signal. And if a breakout happens, then price action will be respecting that bullish trend line one more time. And that was what we saw here. And in fact, if you had missed out on the first breakout, price action came back to give us a retest of structure, which actually lasted for about 2 to 3 hours before that bullish momentum continued to the upside. Then later on, during the early hours of Thursday, that was yesterday also, we also had another position at the breakout of the $70 area. In fact, we had a breakout and multiple rejection of that structure as price action moved considerable well, breaking out of the $70 level during the New York session yesterday, which we actually took advantage of. And I told us all to move our stop loss accordingly to secure all the buy positions that we had in this particular market. So for the sake of clarity here, let's look at what I published under the US oil publication as regards the updates on what to do on the US oil. So I will try to load up my charts. Okay, so
hello everyone.
All right, sorry about that. So we are going to 23rd. Okay, 23rd. All right, so this was how we were buying, added more positions. So at this point we had about 5 positions running with about 600 pips in profits there. Then this was yesterday morning, and I told us all that a breakdown retest of the 70 will be welcome. In addition, a sell position here, move our stop loss to somewhere right around the $69.80 level, anticipating a buy position if price action breaks out the $71 area. And we saw buy pressure continues. We saw the breakout of the $71 area, which triggered the 6th position for us on the US oil here. and I told us all to secure all position, but that momentum didn't last long as we saw bearish momentum come in, hereby taking out all our buy position, as you can see here. So it has been a profitable week for us on the US oil so far. And let's go into the current market structure, the live structure here, to see how we intend to position ourselves ahead of the UK and the New York session. And if possible, if there is no setup for us, then we just keep our fingers crossed. We've made money for the week, and let's wait till next week. We are not in a compulsive mood to make a trade today. It's the last trading day of the week. So if we have been taken out on all of our positions, definitely we just sit on the side, watch the market, and if the market presents to us an opportunity, then we want to be getting ready for it. So now with the current structure we have on the chart here, remember we had a significant trend line which had been guiding our bullish momentum since the beginning of the week, and this was as a result of connecting the series of higher lows here. So we had this bullish trend line figured out at, I think, the second day of this week. We identified the structure and we agreed that we are going to be using this line to guide our trading activity. And what this simply means is that if price action continues to trade above that bullish trend line, we shall feel comfortable in our buy position, and at the same time look out for more opportunities to add more position to our existing trade. But if price action drops below the trend line, then definitely we want to be seeing that as a signal that we might be seeing a momentum shift anytime soon, as the breakdown of that trend line has just given us a signal that the trend line is no longer strong enough to hold that bullish momentum anymore. And we begin to see some traces in that regard during the course of the live session yesterday. I shared this. I told us all that we already had a breakdown of the structure at this area here, but the fact that we were still seeing buy pressure just above that $70 area was a sign for us that buyers are still very, very likely to push price to the upside. So to guide our position at that point, I told us all to move our stop loss to somewhere right around the $69.80 level, with the hopes that that will secure our position, and if price continues to the upside, we shall be part of that move. So right now we have a situation here right now during the later part of yesterday, where price action broke down the $70 level to the downside, and I think we took advantage of this opportunity. I made mention of this after we were taken out of all our buy positions yesterday. If you look at my publication here, I told us all to sell the breakdown retest of the $70 area, and in fact we sold it. I think an hour after, 2 hours after I did that publication, we had a position triggered and price action moved about a couple of pips, I think about 50 pips thereabout, and as at this morning we were taken out of that position at break even. I told us all to secure our position. You know what we normally do when price action moves significantly well in our favor, we definitely want to be securing our position by moving our stop loss so that we don't get caught up in any pullback, sudden pullback that would happen, and at the same time not losing whatever we had made so far. So this morning we were taken out of that position here as price action came back into the entry point at the $70 area. And in the last couple of hours now, let me zoom this in a little bit so that we can see things more clearly at this particular point in time. So this is the situation we have right here. So I told us all that we have selling pressure resume again at the $70 area, and at this point in time it's not reasonable to actually join a sell momentum here. And the reason why I have said this is simply because of the buy pressure that resumed just right above the $69 level, which actually lasted for about 6 hours before that bullish momentum came into the structure. And for me, we will need price action to break down the structure here to give us that signal that the selling momentum is likely at this particular point in time. And one thing about this current structure here is that if this buy pressure becomes very strong, we might likely see a higher low here, giving us a further confirmation that buyers are gradually coming in this market. And if that is going to be the case here, we might see something like a reversal pattern in the form of a double bottom structure, where the $70 area will be serving as the neckline of that area. And you all know what we look out for we want to see price action break out, retest the $70 level, which will happen to be the neckline at that particular point in time for another wave of bullish momentum. So we are not going to negate the expectations of the buyers in this particular market. So we still continue to hold on to a bullish bias here as long as price remain just above the $69 area. Now, to further buttress the importance or the strength of the buyers in this particular market, I would like to share with you something on the 4 hours time frame, which we actually saw at the beginning of the week and was one of the bases of our trading activity for this week. Now look at what we have here on the 4 hours time frame. Remember, we identified this at the beginning of this week where we emphasize the strength of the sellers in this market. So since the beginning of the month of March, price action has been bearish, hereby transitioning into this descending channel that we have here. After connecting the series of lower highs and the series of lower lows in this market, we had this descending channel figured out. However, something interesting happened during the course of the week here. So this is the resistant line of that descending channel which we saw yesterday. We saw our price action appear to have broken out of that trend line, of the resistant line of that descending channel. And look at what happened here following this engulfing bearish candle that happened during the course of the New York session yesterday. We saw how it brought price back into the $69 area, which shares a confluence with the resistant line of that descending channel. And you all know from a technical standpoint, it's a theoretical perspective anyways, that whenever we have a breakout of a significant structure just like the resistant line of this descending channel, there is a high chance that price might come back, do a retest of that structure, buy pressure resume around that area to incite another wave of bullish momentum in this market. So this is another possibility that we are going to be taking into consideration while we monitor price action. So like I said on the 1 hour time frame, if this turns out to be a reversal pattern, that is, price was unable to break down the $69 level, hereby finding a lower low, then at this point we shall be anticipating a bullish momentum at the breakout of the $70 area. So at this point in time, you can see our price is currently trading just outside that resistant line of that descending channel, and there is the high chance that the resistant line will be retested to push price further to the upside. So we are going to be taking this into consideration too as well. However, if price action continues in such a way that it breaks down the $69 level, then it will be coming back within the territory of that descending channel at this particular point in time. Then a retest of structure on our lower time frame, that is sudden pressure resuming just below the $69 level and just right below the resistant line of that descending channel, might likely incite a move that will be respecting that trend line one more time to push price further to the downside. So at this point in time, going into the New York and the UK session today, we have the $69 level and the $70 area as our yardstick for trading activity, as a breakout of either of the structure will be signaling a potential move in that direction. So let's be on standby to catch this move here. So let me scale back down into the 1 hour time frame and do a quick recap of what I'm talking about on the 1 hour time frame here. So this is what we have here on the 1 hour time frame. Remember, this is the resistant line of that descending channel. We've been seeing buy pressure sitting above the $69 level, and it appears price is retesting the resistant line, finding buy pressure above that structure. And if this turns out to be a higher low, then that will be a signal that buyers are gradually gaining momentum back in this market, and that will have transitioned into a double bottom structure, which we need a confirmation to happen in the form of the breakout of the $70 area. And if we are lucky enough, we start seeing buy pressure above that area, we want to be joining that trend continuation to the upside. And if this happens, a breakout of the $71 area will be welcoming additional position to this existing trade here. So that is how we want to be buying the US oil for today. And as usual, you know that whenever we have a perspective, we always want to take into consideration the counter the counter of that perspective, so that we can be as dynamic as possible, so that when the opposite happens, we want to be on standby to catch that move as well. So what are the things we want to be seeing if a selling momentum is going to be happening in this particular market? So like I said, on the 4 hours time frame, we want to see price action break down the $69 area. We see selling pressure right below that structure, which also lines up with that resistant line of that descending channel, and that means that that resistant line is about to be respected one more time to send another wave of bearish momentum to the downside. And if we look at the peculiarities of Friday, where profit taking activities is always very, very common, we might likely see this move where price breaks down the $69 level, selling pressure below that structure, then we could join that decline to the downside. But be rest assured that I will be in the comment section as usual on my TradingView platform to give you an update on what I think will be happening as we continue to monitor this market structure and price action around the market structure we have right now. So that is that on the US oil for today. So I hope I made myself clear. If you have questions or you need me to make clarification to whatever aspect you really didn't understand, feel free to drop your enquiries in the comment section. So that is that on the US oil. So let's move on to the next pair for this week, and for today rather. And the next pair we are going to be looking at today is the GBPUSD. And so on the GBPUSD, like we saw this doing on my publication, we have been selling the GBPUSD. Where is that chart here? Okay, so we have been selling the GBPUSD since yesterday. If you remember, we identified the structure here. Hold on a second, let's quickly run through my publication on the TradingView platform. So where's the GBPUSD? All right, so okay, so scrolling through, so at the beginning of the week we saw this channel where we were looking out for either a breakout of that channel or breakdown for trading opportunities. Here price action broke out, and that was our first buy position. We added the second position here. Price action moved before the sell pressure resumed, and we saw price action breaking down structure, and we anticipated a retest of the structure to join a sell momentum, and this was on the 21st. I think that was on Tuesday, and we also sold all the way down. I think that gave us about 70 pips before this buy pressure resumed, and then we looked out for buying opportunity. Breakout of the 1.2250 level welcomed the buy positions here, which was triggered at this point, and then we saw sell pressure resume here on Wednesday. And on our 5 minutes time frame, if you remember, on Wednesday we identified a simple setup here where we were looking out for a breakdown or breakout for trading opportunity, and the breakdown of the 1.22800 level happened, triggering that sell position at that point, and we rode the move all the way to the downside. Though we missed out on this bullish move, that was just right around the time the FOMC came in on Wednesday. I actually missed out on this one, and later on that day I shared this publication here where the bullish trend line here will be serving as the yardstick for trading opportunity, whereby pressure above that level will be giving us buying opportunity and the breakdown will be giving us selling opportunity. I explained that in details in this publication here. Then we saw buy pressure the following morning, and so this was where we were during the live session yesterday, and we were seeing price action trading around the 1.233500 level and the 1.23100 area. So this was exactly where we were during the live session yesterday, and I think I captured this in detail here. So we said we are going to be looking forward to either a breakout to the upside, taking out all the sell pressure around the 1.233500 level to give us a signal that buyers are still very, very strong in this market. But if price action breaks down the 1.2310 level, we agreed that we are going to be selling the GBPUSD. So with a sell stop order just right below the 1.23100 level, we saw price action break down that structure, triggering our sell stop order. And one thing I said about this current structure is the fact that this bullish trend line here will be guiding our trading activity for yesterday. And I told us all that as soon as price gets into somewhere right around the 1.22800 level, which shares a confluence with that bullish trend line, we want to be moving our stop loss to secure that position as we wait out and see how price action will be reacting to that trend line to decide if we are going to be adding more sell position to our existing trade, or we will be anticipating another wave of bullish momentum. Obviously, that's a bullish trend line. We might likely see a reversal pattern resume around that area, characterized by buying pressure on our lower time frame to join that momentum to the upside. And if a breakdown happens, we want to be adding more position to our sell trade. So this is what we had here. We saw price move to the downside, and we saw price come back into our entry point, comes back again into the downside, and boom, we saw our price action had broken down the 1.22800 level to trigger the second position during the early hours of today. And since then, we haven't seen a situation where price has been trading around that area. So let's go back into our live chart here. So this is where we are right now on the GBPUSD. So currently you should be having about 2 positions running at this particular point in time. And for those who are taking advantage of the sell momentum here, well done to you guys for being on standby to have caught that move. And for those who had missed out on this opportunity, well, I still think the market will be giving us some opportunity to be part of the sell momentum if we are going to be seeing a breakdown of the 1.22500 level, which is more or less a strong psychological level considering the round figure of that price. Now, if we go to the left hand side here, you can see how that 1.22500 level has been a major determinant of price action here since the beginning of this week. And if you look at the structure critically, though we had a breakout at one point in time, but the break above that structure didn't last long before price action came back into that 1.22500 level again, and we saw attempt by the sellers to take over this market. Though price went down a little bit, we saw price action climb up again here. We saw selling pressure, and we saw price climb up into this area. But you can see here that despite the fact that price broke out of the 1.22500 level, we saw that buyers were unable to keep that momentum. And this is evident when you look at what has been happening between the 1.233500 level and the 1.23100 area. As you can see, a strong, sharp rejection of that area happened every point in time. Buyers try to break out of that level, which for me at this particular point in time is a huge signal that sellers are gradually gaining momentum here, while buyers are losing that momentum in that regard. And this is evident that the buyers are losing the momentum as we saw the final breakdown of that bullish trend line, which happened here during the later part of the New York session yesterday. So remember, we had this bullish trend line which has been supporting this bullish momentum for over 8 to 9 days now, and it has finally been broken during the course of yesterday's trading session around this area. And for me, this is a beautiful sign that we might be going further to the downside. So at this particular point in time, we should be having another sell stop order just right below the 1.22500 level in anticipation of this potential bearish move to the downside. And to make our trading activity easy for us to be able to maneuver around this current market structure today, I will be identifying a simple setup that we shall be using to guide this bearish momentum to the downside. So it's going to be serving as a yardstick for us. That is, it will tell us if we should remain in that sell position or not. Now, what we are going to be doing based on the current structure here and looking at what has been happening in this market in the last 24 hours, obviously we can see that price has been finding lower highs, and definitely we want to mark that out and use it as a yardstick for trading activity for today. And what I will be doing is to bring out my line chart so that we can have a specific point of connection. So what we shall be doing right now is to connect the series of lower highs here to give us a resultant bearish trend line, which we shall be using to guide our trading activity for today. So let me do some readjustment here so that it can suit this current market structure, and I would like to thicken it a little bit, give it a red color so emphasize its importance for today. And here we go. So bring back the candle charts, do some little readjustment to fit into those wicks that we have here, and boom, we have something like this. So this is what we shall be using to guide our bearish momentum for today. So we have the key structure at the 1.22500 level and that bearish trend line to be guiding our trading activity for today. What this simply means is that even if price comes back a little bit to the upside, but as long as we start seeing rejection of that area here, we should be looking out to add more position by putting sell stop order again below the 1.22500 level to add more position, as price is likely going to be going to the downside on this one. So on the GBPUSD for today, we shall be holding on to a bearish bias in this particular market. However, as you all know, we always ensure that we keep our options open. We don't want to be too rigid. The market is fluid, and for us to make money in the market, we want to be as fluid as possible. So we want to keep the other options open just in case the market goes the other way around. We are also going to be ready to be part of that move. And in this kind of situation here, since we already have the bearish trend line here as our guide for trading activity for today, all we want to be seeing for the sell momentum to be valid is price action continue to respect that bearish trend line. However, if we see a situation here where price action breaks out of that trend line to the upside, then definitely this might likely be a breach and probably the beginning of a momentum shift to the upside here. And one thing about this current structure just around the 1.22500 level is the fact that it has been a demand zone in the past, hence we need to be very careful around this area. Now if you look at what happened here on, I think Tuesday, okay, on Wednesday, just prior to the FOMC, we saw buy pressure resume around this area on that same Wednesday, and we can see that sellers were unable to come into the structure for like 48 hours before we finally saw something that's looking like a breakdown right now. So it's quite a strong demand zone at this particular point in time, and if we see a breakout of that bearish trend line, we might likely be anticipating a bullish momentum. But we are not going to be joining right away. We are not getting excited around that area, even if a breakout of the trend line happens, because it could turn out to be a false breakout. So we need some confirmation that will give us a confidence to be able to be part of this position. And what we want to be seeing is something like price action doing a retest of structure. Not only a retest of structure, we want to be seeing buy pressure resume above that level on our lower time frame. Then we can position ourselves just right above the 1.22800 level to join that trend continuation to the upside. And this can take roughly about 3, 4, 5 hours before this kind of structure will mature. So let's be on standby for this one if that is going to be happening, but I doubt if it will happen. But if it does happen, we want to be part of this move when it does. So that is that on the GBPUSD for today. If you have questions, feel free to drop your inquiries in the comment section. So right now we have our third position triggered right now, and the stop loss for this position should just be right above the previous structure, which will be dovetailing to about, let's say, about 35-40 pips thereabouts, to secure this, to protect our portfolio against any further risk in this market. So this is what we shall be looking at for today. So let's be on standby for more opportunities on the GBPUSD, and you shall be meeting me in the comment section on my TradingView platform for more updates on the GBPUSD. So that is that. So we shall be moving on to the next pair, and the next pair we shall be looking at is the XAUUSD. And in fact, on the XAUUSD, we have been quite profitable on this pair so far for this week, as we were able to make quite a lot of moves here as we were joining the swings as price action moved up, moved down. We were part of this move as things went on in this particular market. So since the beginning of the week here, let's run through what happened at the beginning of the week, after which we shall be coming back to make a decision for today. So this is what we saw here at the beginning of the week. We saw how price action was trading between the 1990 and the 1970 level, which was a beautiful channel where we know, what we look out for: either price breaks out of that channel or retest or breakdown of that channel to give us a trading opportunity. Though we had a breakout of the structure at the beginning of the week, which we actually missed, and I said let's see a retracement of that structure to confirm that we are going bullish on this one. And what we saw here was that sellers negated all attempt by the buyers to continue that bullish momentum. And remember, the $2,000 is a very strong psychological level in this market, and I showed you on the daily time frame how important that structure is. The last time price action got into the $2,000 level was just last year, April of last year. Over 11 months ago, price action got into that structure, and immediately price came into that structure, we saw a sharp rejection as price was unable to break out of that level. But this time around, we had a little breakout of that structure here to emphasize the potentials of buyers at that point. But the negation of the bullish momentum around the 1,985 gave us a clue that sellers might likely come in at this particular point in time. And to further buttress the strength of the sellers here, we were able to identify a reversal pattern here in the form of a head and shoulder pattern. So we had a left shoulder there, we had the head, we had the right shoulder here as price was unable to break out of the 1,990. And you all know what we look out for whenever we have this kind of reversal pattern. We want to identify a neckline which coincidentally shares a confluence with that 1,970 level, which was our support line for this week. And with the situation here, we had a sell stop order below the 1,970, and we were part of this bearish momentum to the downside as we rode the move all the way to the downside, giving us about 350 360 pips move before we saw price action fall into a consolidation phase just prior to the FOMC on Wednesday. And the consolidation phase was more or less a signal that price participants in the market are anticipating a catalyst that will be driving price movement. And what we saw here on Wednesday, I shared this also on Wednesday, we identified that structure here, and it was just between the 1,945 and the 1,936. This is a very simple setup for us to trade. You all know what we look out for. Whenever we have that kind of setup, we want to see price either break out of that structure for a buy opportunity or a breakdown of the structure for selling opportunity. And what we saw here just prior to the FOMC on Wednesday was the breakout retest of this level, and boom, price action grew significantly, moving over 300 pips in our favor, and we were able to make some profit on that same one on Wednesday. Now on Thursday yesterday, this is what we were anticipating yesterday on the XAUUSD. Looking forward to selling opportunity to resume again as price action was within that sell window at the beginning of the week. Remember, this was where the sell window was at the beginning of the week, and when we started seeing sharp rejection here, I told us all that we might want to be joining a sell momentum here, so we should be having a sell stop order right below that structure. And I think price action moved about how many pips? Moved about 100 pips in our direction before the bullish momentum began. And I hope you moved your stop loss to secure your position, as you would have been taken out at worst case scenario break even at that point in time. And during my after the live session, I shared a publication on my XAUUSD where I said we are going to be buying above the 1,985 level. I think I shared that on my public platform. Let's quickly look at that so that we can be on the same page here. So XAUUSD publication on the TradingView platform. So let's wait while that load up, and then all right, so here we go. So we are going to on the 23rd, which was yesterday. So I scroll down. All right, so this was how we took advantage of this trading opportunities this week. Okay, 23rd. Okay, so following the 25 basis point rate hike confirmed on Wednesday, we had our TP target hit with 500 pips and profit on that one. And then this is what we saw during the live session yesterday. Okay, so it's prior to the live session yesterday, we had this buy position that was taken out. We looked for selling opportunities below the structure, and we saw the sell move. This was the move I was telling you that moved about 100 pips in our favor before the bullish momentum began in this market. So we saw this happen price action takes out the sell positions to trigger the buy position at the breakout of the 1,985. Remember, I told us during the live session yesterday that we shall be having a buy stop order just above the 1,985 so that we can be part of that move if price action ever breaks out of that structure. And thank goodness we had a breakout of that structure, bringing price back into that $2,000 level. And I told us all here that we should secure our buy positions as more opportunities of a breakout retest of the $2,000 level will be giving us more opportunity. But what we saw as at this morning was that we were taking out of all our buy position at somewhere around 50 to 70 pips, depending on where you have moved your stop loss to. So we had some profit on that one. Worst case scenario, you probably have break even at that particular point in time. So let's go back into the live chart right now, and this is the situation we have identified during the early hours of today, and this is what I'm looking at in anticipation of the UK and the New York session today. So well done to everyone who has been part of this profitable journey so far this week. So what we are going to be doing now is to anticipate and look at the current market structure to decipher what our next line of action will be. Now, the first thing I would like to state here is the fact that the $2,000 level has been a strong selling niche so far this week. And remember, this is the highest point price action has ever been this year. If we take a look at the daily time frame so that we can have a better perspective into what I'm talking about here, so that you don't get confused of what I'm saying at this point. So this is the daily time frame here, which we obviously identified at the beginning of the week. You can watch my video on the XAUUSD, which is right in the description box below, and this is the highest point prior to the test of the $2,000 level. So this was the highest point initially, and then during the course of this week we saw our price action did a sharp rejection of that level, and you can see we saw the first touch, second touch yesterday. So it's more or less a sharp rejection of that area, and what this simply tells us is that as soon as price gets into that area, we saw selling momentum resume, negating all attempt by the buyers to try to break out of that level. Obviously, you know, this is what normally happens when price action hits a new high. It takes time for acclimatization around that area. So we might likely start seeing some profit taking activities as most traders will be fearful that they are not sure if price will actually break out of that structure, and this will be reflected as a counter trend opportunity. It will turn out to be a reversal pattern, a little retracement back to the downside before another wave of bullish momentum will happen around this area. And with the look of things here, looking at what has been happening on this chart in the last 4 days now, you can see we have been seeing some sharp rejection of the $2,000 area, where price action appears to be transitioning into a possible reversal pattern here. As you can see, the second touch, price was unable to break the previous high. So this week will let us know if this is going to turn out to be a reversal pattern or not. So we are going to be patient here if we are looking at this from a long-term perspective, as the possibility of this turning out to be a reversal pattern is still something very visible in this market. And at the same time, we could still have a breakout of the $2,000 level to give us a trend continuation pattern too as well. So we have to be very, very careful here. And one thing about this structure is this: if we are going to be buying above the $2,000 level, we are not just going to be jumping in right away, as this is a very sensitive area. This is the first time price action will ever get to this area this year, and there is a tendency to acclimatize before that big move happens. So if a breakout of the structure ever happens today, we want to see price action break out the structure, retest the structure. So as soon as we see the breakout of that structure, we scale down to our lower time frame, look out for a retest of structure, buying pressure above that area on our lower time frame to give us that confirmation that we want to be joining that bullish momentum. Unless that happens, we are not buying the XAUUSD, but be rest assured I will be giving you an update in the comment section of my TradingView platform on what to do if price does that at this point. But if price continues to the downside, we also want to be part of that move even before the reversal pattern is mature. So right now we want to be scaling back down into the 1 hour time frame. I hope you now understand the importance of that $2,000 level here. So going back down into the 1 hour time frame, this is what I was able to identify here, and considering the continued selling pressure just right below that $2,000 level, I will be using this bullish trend line as my yardstick for trading activity today. And this trend line was as a result of connecting the series of higher lows here. As you can see, every time price comes into that area, we begin to see buy pressure resume from that level. So we shall be using this as a yardstick. And how do we use this? Now, if price action breaks down that bullish trend line at any point in time, then this will be a signal that sellers are still very strong at this juncture in this market, and we might likely see price drop to the downside towards the end of the week. And you know what has happened since the midweek? We saw bullish momentum here, and I told you, peculiar with Friday's last trading day of the week, there is a high tendency of profit-taking activities happen, so price action is likely going to be tending towards the opposite direction of where price has been moving prior to the last trading day of the week. So if we see price action drop to the downside here, so we have a key level at the 1,985 level where I want to be looking forward to selling pressure below the structure to join that decline to the downside. So you could have your sell stop order just right below the 1,985, and when we scale down to a lower time frame and we start seeing selling pressure resume below that structure, definitely we want to be comfortable in our sell position in this market. So stop loss should be somewhere right above the 1,995 here, and let's see how far that bearish momentum will go. And in fact, the bearish momentum here, the bearish possibility in this market has a tendency of giving us multiple entries, as we have structures like the 1,976. If it's broken to the downside, retest of structure will be welcoming additional positions here. We also have structures like the 1,970, 1,960, and the 1,945. Well, at this point, I'll have my TP target around the 1,945 if I get my sell position triggered at this particular point in time. Now, in as much as we're looking out for selling opportunities in this market, we should also consider the possibilities that buyers might likely take over this market, considering the continued bullish momentum that still exists in this market. And like I always say, we want to be as fluid as possible. As the market moves, we also want to move with the market. Now, if a bullish momentum is going to be happening here, what do we want to see to make us be sure that we want to be buying the XAUUSD? Well, the first thing, of course, is that trend line. We want to see price action respect that trend line for us to be able to buy the XAUUSD today. So we want to see price action climb above the trend line, probably buy pressure resume above the trend line before joining. And if you are a conscious trader, you want to see a further confirmation in the form of a breakout of the $2,000 level, retest of structure, after which you want to be joining that momentum to the upside. However, if we scale down to a much lower time frame, we can be able to identify something here. Afterwards, you can see since yesterday we have been seeing price action find lower highs, and to emphasize that, we need some trend line to connect the series of lower highs here. So if we bring it down to the 15 minutes time frame, connect the series of lower highs here, we should have a bearish trend line like this, which we want to be using as a yardstick for bullish momentum. So what this simply means is that if price action breaks out of this trend line to the upside, at the same time it will have climbed above that bullish trend line, by pressure above that structure, retest of structure, then we want to be joining that bullish momentum to the upside. Then the breakout of the $2,000 level will definitely welcome additional position here. But I'm not sure this will happen today. I'm not sure, but if it does happen, we want to be on standby to catch that move. So that is that on the XAUUSD. If you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the last pair for today, which is the USDJPY. And since the early hours of today, we already have a sell position triggered at the 130.600 level. As you can see here, we already have a sell position triggered this morning, and currently we are running with about 50 pips in profit. And for those who are taking advantage of this move, kudos to you. Well done for being on standby to catch this move. I want to quickly share with you how we saw the USDJPY this week on my public platform, after which we go back to the live chat and see if we could add more position to the sell position, or we might likely be seeing a bullish momentum this week. So this is how we started the USDJPY this week, after identifying a channel. So it has been more or less of a bearish momentum since the beginning of the week, as we saw price action continue to break down structures like this. So at one point in time, we had buy position also triggered, but it didn't last long. We saw another one here, we saw another one here. We continued to buy, then we added more positions, and then at this point we also added another position here. This was on the 22nd, that was a couple of days ago. And then boom, after the FOMC, we saw our price action drop to the downside significantly, which I actually missed. Remember, we already moved our stop loss, so we were able to make about 150 pips on this one before the FOMC happened, which took us out of all the buy positions that we had there. And then we waited for the market to go into normalcy, as we couldn't trade following such a strong move like that. We need some normalcy to happen before we want to be opening any position at this point. And what we did here was to identify a simple setup here on Tuesday, I think on Wednesday evening, where we had a channel figured out here. So I would just like to move into, okay, this is where we were during the live session yesterday. Okay, so during the live session yesterday, I laid emphasis on the importance of the 131.00 level, which we actually did on the daily time frame, and I shared this in my video on the USDJPY. You can check the description box below. You will be seeing the video on the USDJPY where I buttressed and talked about the importance of that 131.00 level, which has been a strong buying niche in this market for the last 11 months. And because of the situation here, I told us all that if price action continues to trade above the 131.00 level, we continue to look out for buying opportunity. But if price drops below that structure, we look out for selling opportunities in this market. And to sell, I told us all that we want to see price action break down the 130.550 level to sell the USDJPY. Now we had our buy position continue to rise to the upside here, and we moved our stop loss accordingly. I told us all to secure our buy position, which we did, and price took us out of that position, breaking back the 131.00 level to the downside. And during the early hours of today, oh sorry, I missed this. I went to I went to upload the GBPUSD chart on that one. Let me quickly update this right now. So this is what we have right now. Price action is dropping to the downside, so we are over 50 pips in profit on the USDJPY right now. I'll be advising you to move your stop loss accordingly. Let me do this update, please. I mistakenly dropped the GBPUSD chart under the USDJPY, so let me just drop this. All right, so that is that here. So we have the sell position triggered just right below the 130.600 level, where I told us all to have our sell stop order yesterday, and it was triggered this morning, and price action has dropped significantly. Well, so what we want to be doing right now is to move our stop loss to secure the current sell positions right now. You can move your stop loss to your entry point or somewhere around the 130.500 area, so that we can give room for price action to break. Now, with the situation we have here, are we going to continue to sell the USDJPY, or are we going to be getting ready to buy the USDJPY? Well, at this particular point in time, you can see we have a structure here at the 130.100 level, which I will be identifying right now. And let's label this area, as we shall be using the structure as a yardstick for trading activity for today. So we have a structure here which happened to have been broken here, and we have been seeing some buy pressure around this area. So if it so happens that price action breaks down the structure, does a retest of this level, then definitely we want to be added more position to our existing trade. So what I'll be advising us to do here, we are not having a sell stop right away. We want to see how price action will be reacting to that structure to know if we are going to be buying or selling at this point. So let's be patient here. We wait for a breakdown, retest of structure before joining that decline to the downside. And if we scale up a little bit into the 4 hours time frame, you will see that price action is currently trading around that bearish trend line. So let's zoom in out so that you can see what I'm talking about here. So I was able to identify this bearish trend line since the second week of this month after connecting the series of lower highs, and we had the breakout of that trend line during the course of this week here. And from a technical standpoint, we expect after a breakout, price action will retest the trend line in anticipation of another wave of bullish momentum. And since yesterday, we have been seeing price action come back to retest the trend line, so there is a likelihood that we could have a falling wedge pattern around this area, which is more or less a reversal pattern to inside that trend continuation to the upside. So now, if we are going to be buying at this point, how do we intend to join, and what do we want to be seeing on this chart that will give us a confirmation and a leverage to be able to be part of that move? Well, if we zoom into what has been happening here in the last 48 hours, I want to bring out my line chart. It is quite obvious that price action has been bearish. So if we connect the series of lower highs here, what do you think I'm seeing here? A beautiful bearish trend line, and it appears price action is having something that looks like a wedge here, where a breakout of that structure will be giving us a signal that price will be going to the upside. And if a breakout happens, we are not getting too excited yet. We want to see buy pressure above the structure, where the 130.600 level will be the leverage for us to join that bullish momentum to the upside. And you all know the importance of the 131.00 level when it comes to buy pressure in this market. If price action climbs above the 131.00 level, now we become more comfortable in the buy position we are in, and we could add more position to our existing trade. But be rest assured that I will be giving you an update in that regard as we continue to monitor price action. So for those who are still in the sell position, move your stop loss accordingly, lock in the profit right now, and let's see what happens in the next couple of hours as we anticipate the macroeconomic event coming up for the USDJPY in the next two to 3 hours from now. So that is that for today. I hope I was able to simulate all the possible scenarios that could happen today, and I'm very sure you are well equipped to be able to take advantage of any of these opportunities when they finally happen during the UK and the New York session today. So on this note, I want to wish you best of luck today, and I hope to see you right in the comment section on my TradingView platform as we continue to monitor price action. So do have a wonderful weekend, everyone, and I hope to see you same time on Monday as we get prepared for the new week. So I'll be dropping the series of videos for the new week during the course of the weekend, and what we shall be looking out for on this chart. So I hope to see you in the comment section as usual, and do have a wonderful and beautiful day and weekend. All right, bye bye everyone.